start recording. Okay, wonderful. We are recording. All right, so we just did a poll, and the inventory management poll regarding how you're currently managing your inventory. So majority of people, of course, are managing their inventory on Excel or in their head. We've got someone who is managing with Restock Pro currently. Okay, awesome. So I'm going to go ahead and end that poll. That's actually very common. It's very common to manage inventory using Excel. There's been a general pattern that people have tried various different softwares and they didn't do exactly what they wanted them to do, so they would go back to Excel, and it was just, you know, you have 7- and 8-figure sellers who manage their inventory on Excel, and that's because most of the software programs out there are not conducive enough to the Amazon seller to be able to, one, understand where the numbers are coming from, why they're given the recommendations that they're being given, and two, are just not customizable enough. So, you know, you got these one size fits all algorithms and they don't tend to work out. So we're going to talk about that. We're going to talk about the numbers you should be looking at and the specific things that end up costing your business a lot of money. I'm going to explain a little bit more about my background and how I came into all of this inventory management as a solution for my own business. So let's see. Okay, someone says they've used Restock Pro. Okay, wonderful. So I'm going to go ahead and start the presentation. Let's do this with the screen share. All right, and let me know if you can see my screen. I want to make sure that everybody can see my screen properly before we kind of go on. Oops. Okay, good. Fantastic. All right, great. So this is a discussion on proper inventory management to increase your bottom line. So there are a couple of things that are involved in this. There's the short-term kind of right now immediate results of increasing your bottom line, and then there's the long-term effects of increasing your bottom line. Type in the chat for me, if you will, if you ever plan on selling your business. I like to kind of get a long-term goal of, do you ever actually plan on selling your business? Is this a business that you are building to scale and sell, or is it a business that you are just kind of using for cash flow? Either way, inventory management is extremely valuable for this reason, but as we go along, I'm going to talk about how it can be valuable in terms of the long term. I actually have had a recent conversation with a business investor, someone who last year alone bought 10 Amazon businesses, and inventory management was one of the things that he looked at. And so I'm going to be talking a little bit about that this time around. I haven't talked about that as much before, but just kind of based on the conversation that I had with him, some of the various aspects that could cost you a lot of money in the long term if you end up selling your business. All right, so this is best practices for keeping in stock and avoiding costly inventory mistakes. So a little bit about me. I've been selling on Amazon since 2014. I am an Amazon copywriting expert, so I've spoken on stage a lot about copywriting for Amazon, been able to work with a lot of students and clients to increase their conversion rates, some even, you know, doubling or even up to 8% or eight times the increase in sales. So it's not just conversion rate that affects, you know, good copy doesn't just affect conversion rate, it actually can increase your traffic. So I've been kind of working in that space for some years now, spoken on podcasts, spoken on, you know, at the Amazing Summit and other events around, you know, different conferences. And so about 2.5 years ago, you know, in the midst of all of this, was realizing that my biggest mistakes in business were coming from inventory management, or rather, I like to say inventory mismanagement. So I realized that I actually had to get a handle on it. It was the thing that was costing me more money than anything else. And I knew that it was actually costing me more money than I was willing to kind of confront. I knew how much certain things had cost, but I also knew that there were, you know, fees that were piling up on a monthly basis that ended up costing me even more than I was really rationally, you know, I guess adding up against the cost of each product that I was actually ordering. So for example, I got some inventory, I shipped it late, and it got stranded in an Amazon warehouse parking lot for, you know, until after Christmas. So it got there a month before Christmas, and it was lost until after Christmas. So that was $10,000 worth of inventory. That would have made us probably 50 grand, I think it was. It was early on in our business. I think for the second Christmas of our business. And then I had my top seller continuously running out of stock of my top seller. One time lost an entire month's income from my top seller due to mismanagement of inventory. Over ordering new products. I over ordered on a product and ended up spending the next 3 years getting rid of it. Including storage fees and loan interest on top of that, not to mention the capital that I had tied up and was not able to then make money with because it was tied up in this inventory that wasn't moving. Similar things happening with overestimating holiday inventory. So if you've got lightning deals that you did last year and you're not going to do them this year and you haven't factored that information out of your calculation, you can tend to over order. Type in the chat if any of this is familiar to you, if you've experienced any of these over ordering, under ordering kind of catastrophes in your business. All right, we've got comments, of course. Yes, of course. Yes, so that's what I was dealing with, and I knew that I needed a solution. So actually I met this guy. So I needed this solution, and I had decided, I'd looked at Forecastly, I'd looked at some of these other tools, I looked at Skubana. The rep I talked to at Skubana had said that that they charged $1,200, and that wasn't realistic to me. And then I started talking to some friends in the masterminds, and they said that they had the same problem. They were running up against a wall on it, tried all these other softwares, nothing made sense. So I decided I'm gonna do this myself. I'm gonna figure it out. And then 2 weeks after I decided that, I met my business partner, Dan Fernandez. So Dan Fernandez is the founder of Thomason.com. I had heard of Thomason from early on in my Amazon career as someone who, before the big review change occurred, when you could actually have people go on and do incentivized reviews. His company was doing a lot of work with influencers, leaving incentivized reviews on Amazon. And then Amazon kind of dropped the hammer on that. And that portion of his business had to shift overnight. So I was really impressed by how he had pivoted his company, and he was still going strong with that company. So we met at this event, and we were hitting it off. We hung out the whole weekend. And he kept complaining that he was bored and that he needed a new software project. And I had just decided 2 weeks earlier to build a software, having no experience whatsoever. I have an accounting background, so I know numbers really well. I really like spreadsheets, but I had no software experience at all. So meeting Dan, we connected up, and it kind of really just worked out. I had the idea, he had the software ability and the vision and the team to be able to make it happen. And so that's how SoStock was born. So essentially we've been working for the last year and a half, almost 2 years now, basically eating, sleeping, and breathing Amazon inventory management. We've tested out a lot of the popular inventory management softwares. We've been able to locate the holes in the systems, things like, why can't I manage my off Amazon inventory? There were some tools that did not allow you to track your inventory from your third-party warehouses for transferring. There were some where the algorithm just didn't make sense. There were just generally a lot of holes in the system, and there was this constant factor of Amazon sellers continually quitting software and going back to Excel. So there was really something that we knew was wrong with this entire space. And so we put together our initial software, and we presented it to 25 top Amazon sellers. We had sellers in wholesale and private label. We had them in 7- and 8-figure Amazon sellers, and we got them. We pulled them together, asking them for their feedback, and got to the point we created this forecast algorithm. And by the end of that feedback, we had completely trashed the algorithm, got rid of the algorithm, and completely replaced it by December. And that was just based on what we had learned. We basically crowdsourced ideas and information from these top sellers on what the best inventory management systems looked like and what they wanted to see. And that's how SoStock kind of came about, is looking at a ton of successful Amazon sellers systems and being able to kind of cherry pick the best parts of them. They actually would share their Excel spreadsheets with us, and then to take from Excel spreadsheets and be able to automate all of it, and to be able to do things that you can't really do because of the way Amazon gives you the reporting. You can't easily factor out sales spikes and stock outs without getting really granular and going through your sales with a fine-tooth comb in a very tedious and time-consuming manner. We're able to tap into an API and be able to do all of that kind of on the fly with SoStock. So that's a little bit about me, kind of the background as to where I come from in terms of inventory management, and why I can kind of share a little bit about what we're doing. And I see here mention of multiple warehouses. Yes, that was another thing that we found, multiple warehouses. You have to be able to say you've got multiple warehouses carrying a specific SKU, and at the same time, if you've got a warehouse in the US and it's not able to deliver inventory to the UK, you need to be able to tell the software that you're using that it's only able to facilitate your FBA inventory for the US. And so just various different little tiny details like that we're missing in the software. And those types of little details can throw everything off. So we've gone with a fine-tooth comb and really identified a lot of these things, a lot of the moving parts. Okay, so here's a quick disclaimer. So this is inventory management. It's not some new ninja hacking. This is it's math. It's numbers. So I may not blow your mind today, but if I do my job right, I would like to change it. Right, change the way that you're thinking about your business. We are kind of forward thinking in how we're going to be continuing to develop out SoStock, and the idea in general is to be able to visualize into the future of your business, to be able to market and properly control your business so that you're not consistently stocking out, and so that you're actually planning for expansion rather than planning for simple maintenance and keeping in stock. Okay, so it's like the saying, it's the boring things that nobody talks about that will make you the most money in the long run, right? So it's things like inventory management. People don't like to talk about inventory management. They don't like to talk about sourcing, but that's actually two of the top 5 things that this investor that I spoke to about purchasing businesses said there were 2 things that were some of the top things that they looked at when considering buying a business. And so those 2 things, we talk about both of them actually, and they're not subjects that people generally talk about. You'll talk, a lot of gurus and leaders out there talk about selling and launching and ranking and product development, the boring things that can make you a lot of money. Inventory management is one. The investor I spoke to talked about that they look at inventory management or inventory mismanagement as the first thing in terms of making money. So for example, if you've got a product that you're carrying too much inventory, the amount of money that you're paying in fees, investors like to see that because that saves them money, because that lowers your valuation, that lowers the amount of money that you're making that year. And so they look at your financials and they can see where you're wasting money, and those are the things they look at. They look at that, and then they also look at the cost of goods. When you have cost of goods, we have a whole series that we talk about cost of goods, and that's how to keep money in your pocket by not wasting money on shipping and on paying too much to your supplier. So we have a whole series of on YouTube that you can check out. Okay, so the more control you have over your business, the more income you can create, right? So here's let's see. Here's the three simple problems. So you have three basic problems when it comes to your inventory, right? So if you're using straight unfiltered data to gauge what your inventory needs will be, you know, you're doing kind of the crudest estimation of what your sales are, right? So the problem is if you have a sales spike that's thrown into that data that you know is not going to occur again, there is a good chance that you're going to be over ordering. And if it doesn't seem like a big deal, I like to show some of the hard numbers to show how much of a difference it can make. So the three problems are essentially you've got over ordering, under ordering, and not ordering soon enough. So we're going to talk about how to put certain systems in place to be able to avoid some of these problems. Okay, so problem number one is under ordering, right? So you're not ordering enough. So the solution to that problem is something that we call factoring stockouts. So factoring stockouts looks kind of like this. So, okay, say you've got a product that moves an average of 100 units per day, right? And you're maybe looking at your sales on an average of 30, 60, 90, and 180 days, right? And you're averaging all of these data points out. So the average velocity would be 100 units per day, and a 2-month order would be 6,000 units total. So what if you had stocked out for 2 weeks in the last 60 days, but didn't factor that into your calculation? All right, so we can look at the numbers, and all of the numbers are going to change except for the past 30 days. We can see all of these numbers change, and then our average velocity incorrectly drops down to 88 units per day. And so that'll put you at a shortage of 700 units. Now, if you were making a profit of $5 per unit, that would be a loss of $3,500. So we're starting to see how stockouts end up costing us a lot of money. That's not even to mention the amount of money you're going to be spending on air shipping, or in other ways trying to get your inventory more quickly to Amazon, such as high-speed ocean freight, right? So that's $3,500. And to kind of circle back to the conversation about valuation and about selling your company, if you had a simple stock out where you lost $3,500 in profit in that 1 year, you would multiply that, say you go to sell your business and you multiply that by 3 times. So you're looking at closer to $10,000 in lost profit for when you sell your business, if that happened in the year or two that you had planned on selling your business. So that's, it's not just the $3,500 that you've lost. If you're planning on exiting fairly soon, you can also kind of, in terms of that profit, multiply it by 3, and that's how much additional income you've actually lost. Okay, so let me show you how SoStocked works. And this is something you can actually build out in an Excel spreadsheet. I have done this recently just to prove that it could be done. It's something, I feel like I became an Excel spreadsheet master doing this. So it's a little bit of a headache, but it can be done. But I wanted to show you, based on SoStocked, I kind of wanted to show you what that looks like, what this looks like in terms of how it would look like in your inventory planning. So what you can do is we've got stockouts here, right? You see there's a number of stockout days in this particular product. And so it's going to identify stockouts. Now, the way that you need to think about stockouts is not just total number or simply 0 sales. You'll see that there are some days where there's 10 sales, there's 11 sales, but what we look at is anything that is 30% or less of your average daily sales should be considered a stock out. Something went wrong. So most likely your product went out of stock. So I can see here, the product went out of stock and then it came back in stock on the 6th towards the beginning of the day. It'll catch stock out patterns, right? You'll see this here, this whole stock out pattern. So you can see that this product stocked out fairly early on. And then you can see a lot of zeros, but what happens is some calculations will actually, if you make 1 sale, they'll count that as a full day worth of sales. So if you're working on averages, or even if you're, looking at your whole December, and you're saying, okay, I'm going to look at December and I'm going to calculate for December. If you don't remove those stock out days, you're going to be under ordering. You're going to be, your velocity, your daily velocity will be very improperly calculated. Okay. Okay, so to continue on, so that's only one problem. The other problem is over ordering. Now, the solution to a problem of over ordering is factoring sales spikes out of your equation. So sales spikes are, for example, Prime Day or a lightning deal, or you were mentioned on a morning talk show, something like that, right? You have a spike and then you're trying to calculate your next 30 days, what to order, and you've got this huge number, this huge amount of sales that's throwing off all of your data. So the idea is to find that, to locate it, to remove it, and you can do that on, like I said, on an Excel spreadsheet, but you can also do it on SoStocked, and that's kind of one of the other things that we did. And we found that we were working with some of our users, they had thought that their sales data, that what they thought was their sales data, for example, they were looking at, the software they were using, their sales data can get very skewed. So for stockouts, for example, they were being told by their software that they were selling 8 units a day. They had created their own spreadsheet to start calculating some of the stockouts and start calculating some of those kind of margins of error, but they were still running out of stock. Their calculation had said that they were selling 10 units a day. So their software said 8 units. Their own Excel spreadsheet said 10 units. When they plugged into the SoStocked system and we recalculated their stockouts based on based on how many days they had actually been out of stock, and when we're not looking at 0 as being out of stock, but we're looking at 30% or less of your average daily sales, they found that they were actually selling 15 units a day, and they all of a sudden realized how, the reason behind why they were continuously stocking out. So, from going from 8 as one recommendation all the way to, no, you're actually selling 15 units, this is why you're running out of stock, becomes like a really big eye opener. So it's important to understand how stockouts are calculated. You can't just look at zero units as the only marker. You have to also look at the days that you stocked out. You could have sold a couple of units and then you stocked out. The day that you came back in stock has the same kind of story. And then additionally, if you had a listing suspended, you might have a ton of inventory available, but your listing is suspended. You still need to factor that out. So when we built out our stock out tool, that's what we included. And now sales spikes is this other story. So sales spikes, if you've got these periods of time where you had days of sales that were much higher than normal, these days then get removed. And so it starts to level things out and it starts to balance out your sales data, like we said, the lightning deals and things like that. If you don't think that the data should be removed, you can always add it back in on a granular basis, right? And this is something that you're very much able to do on a spreadsheet. It's quite time consuming, but it is something that can definitely be done. And that's why it becomes very important to have a tool that can actually allow you to make the decisions, because, you know, we built SoStock on the basis of that you know more about your Amazon business than an algorithm does. So you need to have more control and more flexibility. So I think that's the reason that a lot of people are doing their management on Excel. And we just decided that we were going to embrace that and figure out how to put that into a software rather than trying to build a fancy algorithm that no one understands. Okay, so that's stockouts. And I wanted to kind of show you a quick representation of what the numbers look like in that, right? So we talked about this 100 units per day and a 6,000 unit order for 2 months worth of inventory. So this is how sales spikes could hurt that. So let's say, for example, you had Prime Day in the past 90 days. And 90 days is some time. We tend to forget, you know, the things that happen in that period. So if you're using that data to start calculating with, as many sellers do, look at the 30, 90, and 60 and 90 day sales patterns. What that does here is, instead of 100 units a day, it actually bumps it up to 116 units, almost 117 units. And it bumps the order up into 7,000 units. 7,000 unit order. So that's 1,000 units additional to what you actually needed, right? So if you were paying for a product that cost $5 per unit, that's $5,000 in additional capital that you're tying up for that period of time. So if you could take that same money and you could get a 200% return on investment, right? If you bought a product for $5 and sold it for $10, 200% return on investment, you would be losing $10,000. So it's not just, not to mention the storage fees. And if you borrowed an Amazon loan to be able to pay for this, regardless of storage fees and Amazon loan and whatever that cost is, the money that you tie up, and maybe you tied up that money and then you were not able to as easily pay for more inventory. And sometimes what happens with us is when we know we're having to pay for some inventory, we almost don't want to place the order. We push it to the last second to place our order because we know we don't have the cash flow quite there. So we tend to push things till the last second because we're not so flush with our cash. So the tying up that capital changes our entire mindset. It causes us to make bad decisions with inventory, just simply based on the cash flow. Okay, so that kind of leads right into problem number 3, which is cutting it too close. So cutting it too close, that is kind of what I was talking about, where you don't have the cash flow, so you're trying to wait till the last second to get your order in, right? Or you're busy, you're an entrepreneur, you could be a solopreneur, you don't have, any assistance, you're doing it by yourself or with your spouse or business partner, maybe you have a couple of VAs, and then you just cut it too close, right? So the thing that we do with that, the solution to get into place is called buffer stock. So buffer stock is like a false zero. It's like, that little extra bit of gas in your tank when you hit empty, that allows you to kind of limp to the gas station. So buffer stock is important because it reminds you to order before you actually need to order. You always have a little cushion in case anything goes wrong, right? What if you had placed your order on time, but there was a hurricane off the coast of China and your inventory shipment got delayed, or you get stuck in customs? All of these different variables that can factor in place. And a good rule of thumb in terms of buffer stock is the more things that can go wrong along the way, the longer your buffer stock should be, or the bigger your buffer stock should be. So if you've got, let's say, and you can use this in Amazon, you can set this as your inventory alerts, right? And you can set it as your inventory alerts. The cool thing is you can set it as your number of units or number of days worth of inventory. So that's something that we have in our software that I'll show you, and you can just check out on Amazon. You can actually check out how to do this on Amazon if you haven't already set this up. So this is how this works. You've got a buffer stock here, right? 10 days worth of buffer stock. So 10 days worth of buffer stock, that's about 560 units worth of buffer stock, because we've got 56 units a day. And so what we're being told then is to send right before we hit that 560 units, right? We're actually being told to ship at this date so that it lands in time for us to, before we hit our buffer stock, right? If we didn't have this set up properly, if we didn't warn ourselves, we would be being told to send our inventory without giving us that little cushion or that little window. And now we're being told to send it later. And we're being told to send it right before we run out of stock. So that's important. So when you are, if you are doing this in Amazon, you can go into your inventory section of Amazon and you can set it up on Amazon. I highly recommend using the number of days feature versus the number of units. Unless you have a product that is very, very consistent throughout the year, you'll want to do number of days, because if you've got a high period, the number of days, you might have, during your high period, 1 day of stock might be a week worth of stock in your low period. So being able to set it so that the buffer stock is adjustable and variable based on your sales is extremely valuable. So one note of caution is, if you have a third party, if you have a supplier and you want to send your inventory from your supplier, you might need them to warn you well in advance, because you've got a 60-day lead time. So this buffer stock feature in Amazon likely won't work if you're not using a third-party warehouse, unless you carry a lot of inventory in your FBA warehouse. Because you have to put a buffer stock warning that warns you in enough time to cover your lead time. So your buffer stock warning might be much, much higher. So just do the calculations and do the math to make sure that it warns you well in advance of your inventory actually arriving. All right. And by the way, is there anybody who is using the buffer stock feature or the safety stock feature in Amazon? I'm curious if anyone has been using that and if they found it helpful. You can go ahead and type in the chat if you feel so inclined. All right. Okay. So that's all in terms of the kind of the day-to-day. I wanted to talk a little bit about some additional things. So I've been having a lot of conversations around the flow of your business with regards to inventory, because the habits that occur is not doing a full marketing plan before you do your inventory plan. So what I mean by that, and I'm gonna stop sharing my screen for a second. Okay, so what I mean by that is that you've got, usually if you're in private label, for example, your lead time is say 60 days. So you need to be looking at 90 days, 120 days ahead of time, and making your marketing plan and deciding what you're gonna do in your business that far in advance. A lot of what is happening in inventory planning today is very reactionary. Let me look at my past sales and see what I'm gonna need based on my past sales. That's just the starting point. You need to start with looking at your past sales, but you need to decide where your business is going to go. Are you going to have lightning deals? Are you going to have, is your seasonality factored in? Are you going to have growth? If you're just looking at your past sales and making your plan based solely on your past sales and just consistently reordering that same amount, you're basically planning on not growing. You're planning on your statistics being flat. So you need to do things like adding additional sales growth into your calculation. And if you're planning on getting into doing more, say, sponsored ads, building that into it and seeing, building out sort of like a tool, you know, whether this is, we've built something called an inventory timeline, and I'll share my screen really quickly and show you how this works. It's not to say that you can't do this you could probably build something like this out in Excel, but being able to envision what is happening in your inventory timeline is extremely valuable. Because you'll see right here, for example, there's going to be a stock out, right? I can see that I'm going to stock out. So I can start making decisions. You know, first of all, I didn't order enough if that is the case, right? And so I can make decisions such as that I needed to have an express lead time, right? And if I have an express lead time, I can actually see what I have to ship on a normal, you know, on an express shipment and what I have to ship on a normal C shipment. And it's actually going to break that down for me. But when it comes to marketing, this becomes extremely valuable. If you're going to run out of stock, what is the point of doing, of continuing to have your sponsored ads in place, right? You know, for example, the short-sighted planning that we get into as Amazon sellers tends to be, you know, maybe we'll think about Valentine's Day, but we won't think about Mother's Day and Father's Day, right? And then we realize Mother's Day is right around the corner. We put an email together, we send out an email, and we make a bunch of sales that are discounted, you know, with a 20% off coupon. And then next month we run out of inventory. Well, we shouldn't have done that sale. You know, we shouldn't have done that sale. We could have actually used a timeline tool, you know, whether you use this tool or you build one out in Excel. Building out a timeline tool is extremely, extremely valuable in being able to test out your marketing before you do it so that you can actually avoid stockouts. There are a lot of stockouts that are self-created. You know, these ideas of, you know, on a whim doing a holiday sale that you didn't plan for in advance. So not only are you able to see, okay, I actually shouldn't do that sale because why am I going to give 20% off to a bunch of people when I'm going to just run out of stock anyway? You just basically lost 20% of every one of those sales, and now you're stocked out and you could have sold all that at full price. Or maybe you're going to sell out, you're going to stock out for, say, a week. You could actually use a tool, and you can put a manual entry, right? Override your data and put a manual entry and say, okay, how many sales per day would I need to make to actually stay in stock and not stock out? And you see, okay, well, I'm selling 10 a day, and you walk it back and you find that if you started selling 8 a day, well, then you wouldn't run out of stock. So you can, you know, slow up on your sponsored ads. You can turn your sponsored ads off. You can do something like raising your prices slightly to slow down those sales. There's a lot of things that you can do to avoid stockouts if you actually just see that they're coming. So kind of looking into the future and being able to see that you're stocking out, right? Being able to visually see when your product runs into the negative, you're able to be more proactive in your inventory planning, right? So not only are you able to use it to plan in real time whether you can afford to do a sale or whether you should turn off your sponsored ads now or not, and then moving forward saying, okay, let's look at all of the holidays, right? We see every single holiday. Let's plan on that we're going to sell something every single holiday. We'll do, you know, we'll probably sell an extra 300 units on Mother's Day. We'll probably sell an extra, you know, 400 units on Father's Day. And you can actually build these things into the calculation. So you see here's a lightning deal for 500. You can do, you know, even just an email campaign, right? And you see it showing up in your timeline. And I have seen times in building these sales out where you realize actually this is going to cause you to stock out, and it helps you with your marketing planning. So that's the conversation that I'm starting to get into, is not just, you know, how to stock out and how to order on time and how to calculate the amount of inventory that you need. That's the first part of the conversation. And because it's not a sexy subject, people don't go much beyond that part of the conversation. And so I'm trying to get a little bit more sophisticated with it and talking about how you need to put your marketing plan together. And then you have your inventory plan. And the next iteration of the next big launch of our tool would be to add a cash flow piece, because the final part of that sequence is cash flow planning. And there's no tool out there that does cash flow planning for Amazon sellers right now. And that's the next venture that we're going to be taking on. So by the end of this year, we should have something to be able to help you plan in terms of your cash flow, and have you able to see whether it's a better mistake or a better choice to order 10,000 units from your supplier and to get, you know, a 5% discount, but then find out that the storage fees are going to cost you twice the savings. So, you know, that's what we need to start, you know, kind of thinking with in terms of as a business owners, going from marketing plan to inventory plan to cash flow plan, and then really becoming sophisticated with how we're handling our logistics. Those are all things that really fascinate me. And those are all ways that you can make a lot more money. So I truly advise you to put together, if you're not using SoStock right now, to at least put together some sort of an inventory timeline, even if it's just for your top sellers. That would be probably a really good way to plan. You could even do it where you don't have to have it necessarily be your top sellers. If you have something where you can just simply plug in a velocity, right? Plug in a velocity that continues to multiply down the days, and then you can kind of see when you're going to stock out. You can kind of start adding things like lightning deals and things like that. It's a very, very valuable tool. So I highly suggest, getting kind of adding an inventory timeline into your marketing and inventory management planning. Okay, let's see if what we have left. I think that's it. So yeah, so it's just bonus, adding your lightning deals, adding your seasonal sales spikes. Okay, so now what? So we do have a couple of questions. So let's see, we'll jump into questions, but I did want to introduce you a little bit to the software. So we talked a little bit about the revolving door of softwares, people using softwares, them either not liking the software or it being, good enough, or there being a couple of, missing pieces. We're in our development stage right now, so we're working a lot with our users to get feedback on the things that they want to see in the software. And so we've made a lot of advances in the inventory management development because we've been working directly with Amazon sellers and implementing basically their wish lists. Okay, so you kind of, this is potentially you got a million different spreadsheets in, say, what are we, cavemen? It's time to advance. It's time to move on. There was nothing out there before that really did as well as an Excel spreadsheet did, and that's what we kind of figured was we have to become an Excel spreadsheet for the 21st century, and we have to think the way that Amazon sellers are thinking and not shove an algorithm down their throats. So we need a better mousetrap. So that's what we did with inventory management. The aha moment was that inventory management is not just science. You've got a lot of people in the Amazon seller space, especially in terms of software, that are very data driven, and they think, that they live and die with data, but there's a bit of an art to inventory management, right? So most inventory managements just address the science. They say, we've got the perfect algorithm, but that there's an art to managing the inventory in your business. And so we put that back into the seller's hands, because it really is true. You know more about your business than any algorithm is going to be able to tell you. Okay, so I want to jump into the questions. I have a couple of questions here. Let's see. We've got the chat. We have multiple products that it's not unheard of to have 30% swings in sales that will lead to over ordering with SoStock. Okay, unheard of to have 30% swings in sales. So you can select whether you include data or not. You can select, we default the sales spikes. We default the sales spikes to being turned off. The sales spikes or the stockouts are turned off or turned on, but you can always turn them off, and you can always get very granular with the stock outs and the sales spikes. So you can control every single data point. So if you know that you weren't out of stock, you can, you can choose not to have that, the software count those as stock outs, or you can choose to have them count as stock outs. So you can, since you can control every single day worth of sales, you're able to then decide whether the data is important to your algorithm or whether it's not. We have another question. We sell items through our own website as well as wholesale and brick and mortar. Does SoStock have a feature to keep track of that? Is that on a SKU by SKU basis? So we don't have a wholesale portion put into our algorithm at this point. You say, oh, was that in a respond to a previous? Oh yeah, yes. So the previous question, was it on a SKU by SKU basis that you can control the data points in terms of sales spikes and stockouts? Just everything that we do on our software is on a SKU by SKU basis. You can manipulate everything on a SKU basis. You can set a global setting, and then you can cherry pick certain products that are very specific and adjust adjust each product based on the particular needs for that product. Okay, and then the other question, so do we have wholesale? We don't have wholesale yet. Something that there was someone who basically used a warehouse and sent inventory to a warehouse, and he called it, his wholesale, but we don't have that piece plugged in yet. We are working on developing various different features, and one of the things that we do is when we go into further developing something, we'll pick some people who are very interested in that particular, I guess, update, and then what we'll do is we'll kind of work with them on how do you want to see it, what do you want it to look like, what's most helpful to you, and so we'll work with a kind of a mini team of sellers to help to craft the different features, and and it kind of goes in terms of a timeline of at what point on our development schedule are we able to actually implement it. But like right now we've got a group of wholesale people who we're working on how to track profitability and whether a product should be restocked based on profitability, and not to show that product as one of the products to reorder if it's not profitable within the last 15 days, those types of things. Okay, so let's see. About the stock edge. Oh, wonderful. Yeah, so Paulo says that he was reaching out regarding discrepancy in velocity. In terms of Seller Central sales versus SoStock sales, and yeah, when you turn off all of the stock out days, all of the sales spike days, all the data should match your Amazon reports exactly. So a very interesting thing about Amazon reports, you may have noticed that in other softwares that you have, the reports that they give you are not exactly matching the reports that you can get from Amazon. And I always wondered why that was. It drove me crazy that it was slightly off. I even remember emailing one of the companies and they said, that's just what Amazon gives us. So this has been going on for years, that you've got companies that are using slightly off data and no one's bothered to figure out why it's slightly off. Being an inventory management software, the data being correct is the only thing that we have, right? It's not good enough to be almost good enough. So we found that the discrepancy was in the time zone change. Amazon's API gives one time zone and Amazon's reporting gives another time zone. So what we did is we matched up the time zones, and we're offsetting all of our data to match with the Amazon reports time zone. So the time zones are accurate and the sales data is accurate. And so you can actually, there's a write-up that we put in our help desk that talks about how to take Amazon's data and look at the SoStock data and check to make sure that they are 100% accurate to the letter. Fantastic. Okay, I have wholesale, Amazon merchant fulfilled, and e-commerce other e-commerce sales to keep track of. So We have merchant fulfilled is something that SoStock does cover. We made a recent update, and you can now track merchant fulfilled velocity. Now you can't necessarily track your warehouse sales, but if you plug in your warehouse numbers, you will be able to, you know, if you update your warehouse numbers on a consistent basis, you will be able to see whether you have to place an order or not. So merchant fulfilled velocities are something you can get in SoStock. We're going to be launching other platforms later in the year. Shopify is probably the first one that we will be launching. We're also opening up in Australia. And so we're continuing to roll this out. You know, we launched a little less than a year ago. So we're continuing to roll out new features. We have new features coming out all the time. Next week, our feature, one of the features we are rolling out is the ability to pull past sales data. And so instead of basing things only on an average, you can base it on, say, you know, you want to see what did I do last Christmas? I want to use the data from last Christmas, and then I want to use these additional tools such as stockouts and increasing, you know, say, you know, you're going to do a sponsored ads campaign, so you want to increase it by 10%. All of these little tools that you can use, and the basis would then be, you know, you can make the basis instead of the past 30 days or 90 days worth of sales, you can make them be last year's sales. Let's see, Shopify integration would be fantastic. Keeping our local inventory numbers accurate while shipping to FBA and through Shopify has been a pain. Yeah, fantastic. And if you currently fulfill through Amazon, we do track any Shopify sales that are fulfilled through Amazon. So that's one thing that we do track is if you are fulfilling through Amazon, that velocity will be tracked. It's just if you are fulfilling, you know, from somewhere outside of Amazon, that we don't track that. But if the sales like in fulfilled by merchant come from Amazon, anything that comes from Amazon, we're able to track, essentially. Okay, and we have some questions here. Why is this not showing up for me? Let me see, the Q&A, I'm trying to get the Q&A. Let's do a stop sharing for a second. Okay, the Q&A, here we go. If we consolidate our shipments from all of our SKUs and try to ship all of our products once a month on a certain date, can you set it up so that you know when to order based on lead time, but also when we expect to ship? Yeah, let me see. So you've got all of your orders. What would have to happen is you would have to, yeah, you could set it up like that. What would have to happen in order to send, you know, when you expect to ship is you could change that date. So you could, you know, we would show all of the products that you need to order, say within the next 30 days, right? And so here's all the products you need to order within the next 30 days. You can click a button and it creates the purchase order, right? So it will create the purchase order with all of those SKUs and in one purchase order. And then you can change the lead time. So if you say, okay, we're starting to place the order here, but the lead time, we're actually going to ship on this date. You can actually adjust the date at which you ship. You can just say, okay, the production time is going to be a little bit longer than normal because we're going to ship a little bit later. So I think you should be able to do that. You can always jump on a call with me and we can kind of go over those exact scenarios if you have any questions. But I think that that's something that could be doable. If not, if it's not exactly what you want, that feedback can then come to us and we can work out, you know, future developments of how to get it to that point that we can do that. And then cash flow planning would be huge. Does that mean you will also do a P&L type info? I've not found a software that I love that'll allow you to drill to the P&L, especially when selling across multiple marketplaces and accounts. I'm not sure about the P&L. We're still figuring out what exactly that piece is going to be. The original thought was that we're going to do it so that it can interface with whatever tool you're using, like a Xero.com or a QuickBooks, something like that. So we haven't decided what exactly that's going to look like, but the thing that we're most interested in is finding out what the true value or what the true profit is. You know, find true profit where you minus out the storage and minus out, you know, all the additional fees. What is the true profit of your product? So you can actually see if you're really profiting on each SKU. And then the other thing is, how do we want to be able to tell you, you know, are you going to be running out of inventory, or are you going to be running out of cash? Like if we can see what your cash is, we can start to predict based on your projections, you're going to be running out of cash. You'll be in the negative on this order or on this pay period. And then the last thing would be how to help you make decisions, you know, how often to transfer. Does it make more sense to transfer more often or less often? Is it going to cost me more in warehouse labor or more in Amazon storage fees? And making all these decisions based on, you know, what is the most cost effective thing. So that's kind of where we're headed with that. And then probably interfacing with something like a QuickBooks or something like that. But again, we haven't surveyed enough to find out what is needed, and we haven't really kind of dove in to discuss, you know, what a P&L might look like. Okay, last question. How do you calculate growth into stockouts? Growth into stockouts. So, yeah, so essentially you would first have to factor out the stockouts. So if you have, you know, a month's worth of sales and you ran out of inventory for a week, you would then say, okay, if I didn't run out of inventory, what would it look like? So you can say, well, I was selling 10 units a day for every day of the month. So I'm going to say that I would have sold 10 units a day on those days as well. And then on top of that, you would then be able to, you know, add a percentage increase. So you say, okay, I'm going to grow, you know, I want to aggressively grow this by 10%. Then you can add 10% to your current order on top of that. So you first have to factor out the stockouts, and then you have to add the growth once the stockout is factored out. So hopefully that answers, hopefully that's clear. Let me see. I think that's all the questions that we have. We're wrapping up here, guys. Thanks so much for all the questions. Okay, just gonna do real quick, share this last thing. We do have a little bit of an offer for you guys if you are interested. What we are doing right now. Okay, so we are offering 1 month free. Now we don't offer free trials. If you've been to our website, you may have noticed we don't offer free trials. And this is because we work one-on-one with people. You'll see right there, we're also offering an inventory management coaching call, a one-on-one coaching call. So I speak to every single person. I can talk to you about your business, about how to use the software, and what types of things to build into your plan to be able to get the most out of your inventory management. And that's why we don't do free trials. So I only offer free trials on something like a webinar for sticking around. So, and it's also $59 a month after that. And the $59 a month is definitely a deal. Most companies have a tiered structure, so they'll, you know, charge you based on the number of orders. We're going to be moving in that direction very soon. We're not there yet because we want to work with our users and build out the software and continue to make it a very valuable piece of software. But we will be raising it. We're actually going to be raising it to $79 probably within the next 3 weeks. So even that, you would be getting the $59 for life for as long as you have the listing. Doesn't matter how many SKUs you have. We have people in there at $59, and they have, you know, no joke, one of our sellers had 200,000 SKUs, and you know, you could have 10,000 orders a month and the price would not go up. Doesn't matter how big you grow your business, doesn't matter how many features we add. You know, some of these features that we add, we might be requiring an additional fee if you want to access certain features. None of that matters if you get in at this point. This early, we call it early adopter. If you get in, you'll be $59, unlimited orders, unlimited features, all of that. And then I give my copywriting masterclass and access to my copywriting masterclass. You know, the ability to increase your sales, you know, double your sales pretty much overnight sometimes, you know, and that's not every case. But I have had students come up to me and say, applying certain techniques, copywriting techniques, they've been able to take their conversion from 15 to 40%. I've had a couple of different people say that to me. So copywriting is very, very underestimated in the Amazon space. That's why I talk about it so much. That's why I'm so passionate about it. And my masterclass comes with, if you sign up for this offer, this webinar offer, and then access to Thomason for 2 months free with the unlimited plan. And so that is the ability to connect up with influencers and get them to help to promote your brand. You can cash in on that at any time. So if you wanted to wait until you had enough inventory, you placed an order and you had enough inventory where you wouldn't be stocking yourself out by, you know, working with an influencer, you can save that until later. But, you know, if you sign up, you get all of these things. You know, if you don't want to keep the software after 1 month, you try it for 1 month and you don't want it, then you essentially pay nothing. You get to keep all the bonuses. You essentially pay nothing, but so you sign up for free today, pay nothing, and then you would start being billed a month after. But if you decided to cancel, you would keep everything regardless. So it's a pretty cool, you know, offer. And again, it's free trial, then $59 a month for life. And that's at sowstocks.com/webinar-lifetime-offer. In the chat, I'm going to share a link to that, so you can just grab it from the chat. And then we have another couple comments. Let's see. Our price moved to a tiered structure after, oh no, so the price will not move to a tiered structure after you sign up. So with all of our people who are signing up in this period of time, it locks in the price for life. So you'll never have that tiered structure. As long as you keep the account, you'll never have that tiered structure. And so that's why it's a good time, especially if you're paying $400 a month for your, you know, for your inventory right now. There are some people who are with other companies. We're going to try to remain cheaper than most other companies, even when we do our tiered structure, because that was kind of one of those things where we wanted there to be a smarter option, and we didn't want to gouge people, but we will have a tiered structure, but we'll try to keep it cheaper than others. But you get it now and you lock it in. So if you're paying, you know, hundreds of dollars per month, this would be a good way to kind of no longer do that. Let me see. We've got another question. If we've already signed up, do we get all this as well? Yes. So if you've already signed up for SoStocked, go ahead and send me an email and I can send you access to all of the bonuses. So yeah, so go ahead and just send me an email to chelsea@sostocked.com, or you can just do stock@sostocked.com. I'll type it into the chat. So yeah, so if you've already got an account, go ahead and just shoot an email and say, hey, I want the webinar bonuses, and then I'll get you access to that. Okay, cool. So unless you have any questions, you know, feel free to reach out, you know, at that same email that I provided in chat, stock@sostocked.com. And then we have if you go to sostocked.com/seller-secrets, we're talking about Chinese trademarks in about 2 weeks, right? So if you've been interested about Chinese trademarks, you've heard about Chinese trademarks, but you don't really know why they were important or whether they make sense for your business, we'll be talking to Afulabi, who does a lot of our webinars, and he's going to talk about what that's all about. And so if you're interested, jump on over and sign up for that webinar. And also, we've done a lot of stuff. I talked briefly about cost of goods and being able to increase your profit through cost of goods, improving your cost of goods. And we've got a ton of webinars on that subject. So if you go to YouTube and you type in SoStocked, one word, SoStocked, just like this, in YouTube, you'll see our little symbol here. our little logo, and that's our account. You can subscribe. You can also look for our playlist. We have a sourcing secrets playlist, and that's a bunch of webinars about how to improve your cost of goods. Just for an example on that, we worked with Afulabi, who does those webinars, and took 4 of our top products that we were paying way too much for in terms of tariffs. We were paying too much in duties, and we asked to take a look at those products and see if you could reclass them. And 3 of the 4 of them got reclassed. They went from 28% duties to under 11%. So we're saving, what is it, like 17%, something 17% in duties just by working with Afulabi. So there's a lot of things that you can do to save money on cost of goods. So those videos are definitely worth checking out if you're really looking to improve your profit this year. All right, I think that's it. Thank you guys so much for having me share this with you, and reach out if you have any questions. And I look forward to hopefully meeting you and helping you in business with your inventory management. Oh, what was the spelling of that company? I think you're talking about Afulabi. His company is Hanu, Hanu Worldwide. I have his email. I can share you his email, savings@Hanu Worldwide. Mention that you were on a webinar with Chelsea from So Stocked. So he knows who you are and can treat you right. Okay, great. All right, thanks so much, guys. And yeah, reach out if you have any questions. Otherwise, have a great rest of your day and have a great weekend. All right, bye-bye.